year out to the management of Tata Motors, they will be detailing their numbers.
For April to June, Tata Motors consolidated the turnover net revenue was 46,700 crores for this quarter, April to June, up from 43,000 crores in the same period last year. EBITDA margin remained steady at 14.4, same as last year. Profit before tax of 2,900 crores and profit after tax 1,700 crores. The consolidated results have been mainly powered by the very good performance in Jaguar Land Rover and a solid balance sheet with consolidated net automotive debt to equity at 0.31 as at end of June. Tata Motors standalone performance was impacted severely by the continued weak macroeconomic environment and competitive pressures in the marketplace, affecting our net realizations and profitability quite significantly. For Q1, we are reporting a net revenue of 9,100 crores, down from 10,500 in the same quarter last year. EBITDA came down to 207 crores compared to 774 crores in the previous period, and EBITDA margin was 2.3% in the quarter just ended. Both profit before tax and profit after tax came in much higher at 700 crores plus, mainly supported by the dividend we received from JLR in the first quarter. On a standalone basis, the net debt equity ratio was 0.81:1. Jaguar Land Rover, just to caution, these results are as per the IFRS accounting standards. Jaguar Land Rover net revenue was 4 billion pounds, up from 3.6 billion pounds in the same quarter last year. EBITDA came up much higher at 16.5% compared to 14.5% a year ago. Profit before tax 400 million and profit after tax 300 million, both up from the same period last year. Jaguar Land Rover performance was mainly due to the higher volumes, richer product mix, and favorable foreign exchange. Similarly, on a comparison of net debt equity ratio, net of the cash JLR had in its balance sheet, the net debt was negative, which is surplus cash of 147 million pounds. Some of the business highlights in our India Tata Motors business. We launched the Horizon Next, an aggressive customer-focused strategy that provides best customer experience based on best vehicle experience, purchase experience for the customers, and followed by technologically supported after-sales support. We unveiled 8 new upgraded and enhanced products across 5 brands, including the CNG ranges in Tata Indica, Tata Indigo, and Tata Nano. In the M&HCV truck segment, we increased our market share to 61.7% in this quarter. And in the commercial vehicle business, 6 new applications of our high-end truck, Tata Primer range, for different segments were introduced in Sri Lanka. We also launched the Tata Motors profile for commercial vehicles, demonstrating our commitment for value addition to the customers. In Jaguar Land Rover business, wholesale and retail volumes were at 90,000 and 94,000 respectively. The retail volumes came stronger, which represents 8% increase on wholesale and 10% increase in retail over the same quarter last year. In this quarter, after capex and product development expenses, free cash flow was about 340 million pounds. The capex and product development spend for the quarter was at 558 million pounds. I already referred to the cash and liquid funds in the balance sheet of well over 2 billion pounds. And further, we have undrawn, unutilized committed facilities from banks aggregating about $800 million. This 800 million has further been increased in this quarter to 1.25 billion. During the quarter, as I said earlier, JLR declared an equity dividend of 150 million pounds. Credit rating improvement was achieved, and new product launches. New Range Rover achieved highest JD Power appeal score in its segment, and Jaguar was named as the best brand in the JD Power UK study. In terms of geographical distribution, China region accounted for 21%, North America 16%, UK 17.9 or 18%, and Europe 20%. Within a percentage or two, more or less in the same range as the earlier year. Looking forward, commercial vehicles. In India, we see prolonged weak consumption and subdued industrial demand, and we believe CV's demand will be continuing to be under pressure. Competitive intensity is resulting in higher marketing costs for the manufacturers and putting pressure on the margins. As a company in our business, commercial vehicles will continue to leverage our strengths. We have strong understanding of the domestic market, a very wide and compelling product portfolio, strong brand and customer support, widespread distribution network, and economies of scale. We will continue to upgrade our products, value-added services to the customers, and expand our export potential in the relevant markets. In passenger vehicles, our customer-focused strategy is based on 4 major pillars covering product, manufacturing process, customer experience, and quality of after-sales service. Similarly, we will continue to avail further opportunities for extending our export base. Looking ahead for Jaguar Land Rover, we'll continue our focus both on refreshed and new Jaguar and Land Rover products. Sales momentum is continuing with new Range Rover, Jaguar SF, XF, Sport Brake, and Jaguar F-Type. And we will be launching the new Range Rover Sport and other derivatives. Continue our focus on profitable growth, managing costs efficiently, and improve operating efficiencies to sustain the growth and profitability momentum. We will have large outlays of investments in future products, technologies, and manufacturing capacities. We hope we will continue to generate strong operating cash flows to separate CapEx and product development. CapEx and product development spend for this year is expected to be in the region of £2.75 billion.